Salim Raza Saab mentioned about debt servicing of 10 trillion for the current fiscal year. And I agree that there is a budget allocation of 9.8 trillion, 9.10 trillion rupees. And I agree that there is a allocation of 9.8 trillion rupees for the current fiscal year for servicing of debt. But actually, we will be ending up much lower. And I have recently mentioned also in one of the media talk that our debt servicing will not exceed 8.5 trillion rupees, which will be 1.3 trillion rupees less than what have been budgeted in the last fiscal budget. And I'm hoping that as we proceed during this fiscal year, we'll be able to have even more savings, and it will be in fact lower than even 8.5 trillion rupees. So I just wanted to have two points added to what Salim Saab have said. Coming back to the banking sector, because today we are having banking awards, so I will just focus on the performance of banks, and some will make some points about further improving the performance of the banking sector, because all these the honorable bankers and other financial institutions executives are here, so we'll focus on the performance of banking sector more particularly. So Pakistan's banking industry has played an important role in the country's economic development over a period of time. Despite the economy faced many challenges and shocks over time, our banking sector has remained sound and continued to support the economy through uninterrupted provision of financial services. Key financial indicators of our banking system, such as capital adequacy, asset quality, and profitability, continue to depict strong performance than many regional peers. Having said this, there is still a considerable ground to be covered, especially in improving financial deepening and financial inclusion in the country. Our banking sector's assets as percentage of GDP stands at the lowest position compared to other regional economies. As of June 2024, outstanding deposits and advances in banking in Pakistan were only 26% and 11% of GDP, respectively, far below the regional average of 75% and 67%. And the size of SME loans is hardly 1% of the GDP. It is a fact that our government's domestic borrowings needs have been quite high, and that may have affected the availability of loanable funds for the private sector. But it would be interesting to ask if we are unique in this regard. Data suggests that this is indeed not the case. Government domestic debt as a percentage of GDP in Pakistan at 45% is lower than that of Sri Lanka at 62%, India at 48%, and Malaysia at 49%. Similarly, our banking system's net credit to government in terms of GDP of around 29% is comparable to India's 26%. Yet, the banking sector of these countries have managed to grow their lending to the private sector and overall asset base consistently than our banks. In my assessment, our inability to grow the deposit base and increase financial inclusion at a pace similar to our regional peers largely explains our lagged performance. Banks' deposits as a percentage of GDP in Pakistan have risen from 22% in 2022 to only 26%.
कराची में गवर्नर स्टेट बैंक जमील अहमद खान तकरीब से खिताब कर रहे हैं। उनका ये कहना है कि बैंकिंग का शोबा मुल्क की माशी तरक्की में अहम